Yeah, a lot of interesting takes here. Of course, the magical scenarios, cuckoo land, you name it. People have called it that. Michelle Schneider joining us right now, managing director of the Market Gauge Group and the author of the best-selling book, Plant Your Money Tree, a guide to growing wealth here. Michelle, let's start off here with your reaction to the Fed. How much faith, I guess, you have right now in the communication coming out of Jay Powell and the rest of the members?
Well, in terms of my faith in the communication, I will say there's two separate things to look at. He is about as transparent as one could expect from somebody in his position. But with that said, he is really, I mean, people are calling this hawkish. I actually am more in the camp of the gentleman from Guggenheim, that this was, in terms of fighting inflation, kind of a joke. 0.25%. I was hoping for 0.5% as just for good faith for the economy. As one who's very bullish in commodities, of course, 0.25% is one of the reasons why we're seeing the commodities getting another boost today, along with equities. So the question is, at what point, who's going to be right? Does the Fed hike more from here? Most likely. But if we start to see another slowdown in some of the statistics that have come out recently, like manufacturing shrinking, consumer confidence shrinking, retail sales shrinking, more impact from the war with energy prices going up, I don't know how hawkish he'll remain for the rest of the year.
Talk to us then about these equity markets. Day 3 here of a pretty significant rally. We've heard from JP Morgan saying that the bubble correction is almost done. We've heard a lot of guests on this program talking about a tradable bottom here in the next few days. How are you thinking about this movement of stocks higher and at least maybe some of the geopolitical headwinds, if we can say that, start to be putting behind us?
I don't think we're going to see the geopolitical headwinds behind us just yet, because even if the Russian-Ukraine situation abates, we have another little story that emerged this week that I find extremely concerning, and that is China talking to Saudi Arabia about oil and having the oil priced in yuan. So that, let's put that on the shelf for now, because we really don't want to see that emerge for the U.S. dollar, for the economy in the U.S., et cetera. But going back to this rally, this is not unexpected. A, it got really oversold. B, very typical of the type of scenario that we have from a macro situation, which is stagflation. You're going to see a trading range. So we found the support near the February lows, with things getting oversold, with obviously Powell not being nearly as hawkish as he could have been if he'd gone up to 0.5%. And so you have also retail investors so used to buying the dip, and that's what's happening here. But if you step back, we're not even halfway to the difference between the top of the S&P and the most recent low in the S&P. We're trading close to around 440. If we look at SPY, we were down as low as 4,000 and up as high as 480. So
Michelle,
yes.
Do you then dare go short, whether it's equities or the dollar or treasuries in this market? There's a lot of question around those trades going on right now.
Well, I prefer to say, instead of going short at this point, because we need to see more evidence of that. We have a couple of sectors that are surprisingly amazing, like transportation, and that's a whole other story. I would say I would continue to look at commodities. In this recent correction that we had in gold, silver, wheat, oil, were buy opportunities. So even if the market goes down, if the inflation continues, which I think it does, that's where you go. You go more into the commodities that you can buy in bullish phases, as opposed to counting on going short, and you can get these massive rallies in a bearish market at any time.
All right, Michelle, always great to catch up with you. Michelle Schneider there of the Market Gauge Group, helping us kick off today's show. Coming up, we got a lot more to talk about. The market, of course, trying to figure